Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So everybody, let's take a look again on the Bitcoin market. As usual we do on Thursday. Overall performance here stands also not too significant compared to the previous times. It's also mostly the same as on the euro currency and Forex market, whereas also we do not see strong performance this week. Anyway, here we have one important moment that could make impact on the nearest performance on the Bitcoin market. On the weekly chart, it doesn't seem important, but it's really things that we need to keep an eye on. Let's take a look at the spike down with this trend support with our flag pattern that we discussed previously. So major question currently, this is definitely wash and rinse, so this is potentially bullish moment. This market has spiked down these lows, grabbed the stops below this area and returned right back up. But the major question is whether this wash and rinse, or in the classic approach this calls as the bearish trap, really lead market to upward reversal and upward action, at least back to the top of this consolidation. Maybe not the upward breakout that's theoretically should follow based on the classic approach, but at least to the upper bottom. That's the major concern that we have currently. In general, it calls us the bearish trap because traders will trade the breakout of the patterns and dropping below the previous lows starts to sell, and then we were trapped on the wrong direction. So the stops was triggered, and as a result, the market shows some upward action here inside of the flag pattern. So that's why it's called the bearish trap, and that's why this potentially bullish pattern. So this is how it looks like on the weekly chart. On the daily chart, it looks better, so we clearly could see here as this spike down is greater than these previous lows. Stops have been grabbed here. Theoretically, we have minor hammer pattern, but this is, well, not very significant detail, mostly because the following performance here, you do not see it stands too active. It's relatively slow. And usually when you see the reversal and failure breakout of some consolidation or market actually stands for a long-term period, you usually expect more aggressive action from the market. So you prefer to see some fast acceleration, at least back to the top of the consolidation. But here we do not see it. And that makes overall situation tricky. From one point of view, we have the bullish sign. It was the wash and rinse of the previous lows. But from the other point of view, you do not have the confirmation from the price action. Price action still stands the same, heavy and lazy. And that makes it difficult to make the decision on the position taking, whether it makes sense to take the position here or not. So, also guys, here, by the way, the dynamic pressure that we discussed previously has been completed, because take a look, market has taken out of this loss. Although we thought about maybe 26, but market hasn't quite reached the 26, it just was stopped at the minimum target of the dynamic pressure, which slightly breathed the loss of the consolidation. So what we could do in current environment? First of all, if you agree to take the risk of the possible failure here and downside, reversal and downside breakout, you of course could make the trade based on these wash and rinse, because your stop will be very close, just below these recent lows. In the case of the success, it will be just outstanding risk-reward ratio. Chances on immediate downside, occasional breakout stands very low, just because market already has grabbed the stops below this area, and it has no additional reasons from the this point of view to show another dive. The one reason might be for taking out of these lows is just market will keep going lower. To the more extent, the target may be the retesting of the previous top around 20 even, so it will be different reasons, and it's not the subject of the current video. But if it was really just grabbing the stops and market's ready to go higher, it will not return back. From that standpoint, it is comfortable to place stops somewhere below this area and just watch what will happen with this situation, whether it will get the positive development. Additionally, you could keep an eye, for example, on some intraday patterns. So here you could see also that our range has been spiked down, it's broken, some further breakout, and it's returning back up. In the hourly chart, you could keep an eye on some maybe bullish patterns will be formed. So, for example, if market will show kind of garters cheaper to buy, that will be more comfortable to consider taking the long position. But in general, the major question that stands on the table currently is whether you are ready to take the risk for a possible upward action with really, well, let's call it not sufficient context for a long entry. So just based on the watching risk that has happened. It has the great potential, but it's just only the only pattern that we have currently for taking the long position. That decision you have to make by yourself. So here we can't say that upward action will not happen. It really could happen. You know the risk that you will take in this case. So all subjects for a position taking is clear. And you need just to decide, are you ready for taking the position based on the background, or you need something more, some more confidence, more patience that will confirm the possible upward continuation. So that's actually what we have currently on the Bitcoin market.